Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, August the 19th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following: do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, wave one is done, topped out at 114.72. Again, this is based on our MetaTrader Windsor broker account. So whatever account you're using, I think it's 114.77 in TradingView. So it will vary, but depending on which one you're using, you look for the swing point top high here, which occurred in 2022. And since then, we've been on a stair step lower. The question is, are we doing a retracement off of this COVID low up to the high, getting that retracement to go higher, or are we going to do off of the low back in 2007 with the swing point high, looking for this retracement? So just remember, we're expecting this wave two, and 3 years ago, we talked about a wave two coming down. Our destination is further down, but at some point, that wave two will end, and we're going to go breaking the new highs. That's the plan. It has always been the plan. The plan is for a correction off of this big move up, get a correction, then we continue higher. The question is this the end, or do we go lower? Well, just because we go lower here does not necessarily mean we have to go way down here, but that's the plan until price proves otherwise. Now you'll notice I have a question mark right here. Well, there's really not much of a question to think that this is over now and we're going higher, because recent price action has shown we should make a new swing point low, but a new swing point low is not confirming this is going to be it. It just means it's going to be lower than here, and we could go a lot deeper. Because right now we're talking about 96 down here is the low, and we're shooting for 80. That's about 16 points. That's a long way in between. Got it? So why do we think this is basically not the low? Because of recent price action. We'll jump over to our charting platform. And when we had that recent low, we did a beautiful 3-wave correction that went right into our resistance zone where we expected it to go and get rejected. So far, so good. And we went through the theory behind Elliott wave and how these corrective moves, if this is the downtrend, which we've been in since about 3 years ago, reversing in that correction, then we should see a 3-wave correction up. And the proportions are A typically equals the C move. So if this is in fact, which turns out to be based on this price action, this was the initial A up. We had our B correction, and then the C went proportionately with the A. And this is what you use the 3.2 from swing point low, swing point high to this higher low. We should have at least moved toward 99.76. That would have been A equals C. Or you can go a little bit further towards a 1448 or a 1272. And if we go up in that area and still reverse, it's still more likely an ABC. Well, if this was going to be the bottom reversal, and that was the end, believe, that's all, folks, that's it. And this would have been a 1 and a 2 going up in 3, then this move has to at least go up to this 1618 or higher to be a 1-2 going up in 3. So proportionately, we drew this pink box and we said, hey, I'm expecting this to do a 3-wave correction, end in this box, and reverse back down. Well, this was in advance. We gave you this target, and it went up right into that target. And Mr. Tucson, what did it do, Ian? Reversed. Now, if you look at the current price action from this recent low, once we take that low out, then it sets the tone. We're going to make a new swing point low down lower. That's the plan based on this 3-wave correction stopping, and an ABC type of move warrants further downside. But if you take the swing point low here to the high, we're right in that 618786 zone. So I still think, hint, any rally in the short term should be sold. Like we talked about rallies in the short term being sold, that we expect more of the same, that we're going to break lower. And once we finally close below, we've tested it. We haven't closed below this yet, but once we do, then we have a 75% chance we go into 96.60. 70 plus, we're going to 96.26, and that puts us at a new swing point low. So we start closing below this green box. The probability, in fact, means we're going to go test this low. And if we close below here, sets the tone we're going lower. Close below here sets the tone we're going to make a new swing point low. Fair enough? So any rally should be sold in the short term, because I expect the dollar index to go lower, period. Got it? All righty. So remember this rule when you're talking about corrections. Are we looking at corrections for continuation? Are you talking about bottom reversals? And typically in a bottom reversal, you start to see some impulsive moves. And this didn't qualify for that because it was not extending out toward the 1618 or higher. It stopped right in the quality / 1448, 1272 area, and you can see what's happening. Fair enough? So again, we talked about weeks ago that we were going to get a bounce. Why? The software. Well, technically we needed it. You come over here to the software, and we'll go back a few weeks ago when we got that reversal, and we talked about this. We said when the weekly got a PAI hook and a trend momentum cross, that means the daily is going to cycle up. So we had a weekly oversold, we had a daily oversold. At the same point, we were coming to this battle zone after this decline where we kept making this high, low, lower, high, lower, low. So this is all part of the plan. And the weekly turn, the daily turn, we got that beautiful weekly PAI hook, trend momentum cross. What does that equal? The lower time frame, which in this case is the weekly. So let me move this out of the way. This is the weekly chart. So we got that weekly PAI hook, trend momentum cross, slope angle separation. It meant the daily was going to cycle. So this was beautiful, right? We knew the daily was going to reverse, the weekly cross, so we knew this eventually was going to cycle. But as this started to bounce and we saw this pullback, during that pullback, I was very adamant saying that this should not go on to make a new low yet. We need a 3-wave correction. And based on the weekly hook and a cross, the daily needs to cycle. What does that mean? That means the red, blue, and green right here of the AI, everything's AI. Well, this is the PAI, price AI right there. So as that was cycling, notice red and blue made it, but green did not. And what are we talking about making? Up here toward this red line. So it wasn't a complete cycle. So when a weekly hooks and a cross, you get a PAI cycle along with a trend momentum cycle. And if we go back to this move up, we got the trend momentum went up there and touched, and we got the red and blue, but money flow did not. So during that period, as this was pulling back, I even drew the Picasso and I said, expect this to go from a move up, which we were slingshotting lower, to slingshot higher. And this would allow the PAI to finish the cycle and the trend momentum again to go back and cycle. And that's when we got that beautiful ABC move. So when I start to see technical picture, I have a God-given talent to read and interpret price. You put that with the Elliott wave and our hook and across, and that spelled we were going to go higher. And we even drew this weeks in advance, knowing that we were going to do a little ABC. And this target up here was what? Well, on this platform, we use Ichimoku Cloud. It's a visual aid. And whenever you know a time frame is going to cycle and prices below the cloud, it typically will what? Cycle up, and price will get sucked and pulled into the cloud area. We even talked about it potentially running into our Magic Fibo area. And we went just shy of it. Just shy of it. That was the plan, to make a lower high. And the plan now is to continue this grind lower to make a new swing point low. Fair enough? So back to the charting platform. And again, any rally should be sold, but Mr. Tucson, James, Ian, Eric, Randy, when this closes below here, Alan, it's going to do what? Go down and make some new lows. So we know it's going to take out this low by getting to the extensions. And based on that move, we would then expect new swing point lows. Well, check this out. If I take, instead of this swing point low to swing point high, I do it from this swing point to that swing point high. So this low to that high. Guess what else it does? You can see from this low to that high, we have, actually, let me move this out, remove it so I can show you a fresh one. Got a lot of lines on here. You think, well, what is all this? I'm going to show you. From this swing point low up to the high, by breaking this initial box, we have the 618, 786 zone off of this low. From that low to the high is this green box, 618, 786. And you notice the 618 on the lower low is the 786 on this higher low, and both spell the same. When you start to close a candle body, not a wick, so we need a body close, it's going to set the tone that we're going to do what? We're going to go on 75% chance we're going to go to this 1448 at 95. That's off of this low to that high, and we're just testing the 618. So we need to close below this bigger box to set the tone. We're going to get down there, but that is the plan. And I didn't mean to move that. I want to add this new box so we can see we have two boxes in this area. That is important for us to take out. The first one, this a little bit darker, is from this low to that high, and we're testing it. From this low to that high, this is this larger box, and we haven't taken that out either. So remember, by closing below this first box, we're going to take that swing point low out. So we start closing below this. We're going to take that swing point out. Then what does that say? By taking this swing point low out, we now took out the 786, 618 area, which now says we're going down to 95.80. 70 plus, we're going to 95.30. So you can see why we start taking this zone out, says we're going to take this low out. And by taking that low out, it says we're going to go down here, which is a new swing point low. So that is the reason I don't think this is the end of this move. And this is it. We got a three-wave correction and we're working on grinding our way lower. Fair enough? So this is why, in my humble opinion, any rallies should be sold. I said it last week when we came down in here. Any rally should be sold. Look at this thing. Went up and got rejected. Well, guess where it stopped? Guess where that stopped? If you take your 2-point tool and you go up from the high to that low, we went right to that 618 area to get rejected, which is still bearish. Amen? And as we go from the low to the high, we start closing below that 618 level. That remains bearish. And we take this swing point low out from that low to that high. That's the 618786 zone. So you could hear the redundancy. What's the common denominator? You should always have 618786s on your charts. And these extensions 1.1448, 1.272. These are critically important. And price action teaches you where these levels are likely to go based on what? Price action. So force price to prove its intentions. Why is this important? And why do we spend so much time on the dollar index? Gary, I don't trade it. I don't typically trade it either, but where I know where the dollar index is headed, I can have high probability of where numerous other asset classes are going. And number one is the euro dollar. We talked about buying this euro dollar weeks in advance during this pullback. I would not be buying it here, warning you. And after this pullback and rally, I said we need to sell these rallies because we still need to make another low. And we talked about this weeks in advance, setting up your euro dollar based on the same thing. The weekly reversal set up the tone for a big run, right? Said that weeks ago. And we said when the daily came back in this most recent move, we were going to buy this dip. But go back to the weekly where we talked about this reversal. This was big. Went up 1,000 whatever pips, 1,500 from 101 to 117, 118, about 1,700 pips. That's how you make some money in this industry. You take the high probability outcomes, you got the perfect software to give you the entries, trigger higher, and most recently we keep buying the dips in the uptrend. How did we know to buy this dip? Because the daily gave us another reversal and an entry. During this corrective three-wave action, we talked about it. Hey, I'm going to set this software to buy this dip in advance, and when it does, we're going to get in and move up. Since this, we're up into the several hundred pips, 300 pip range, and we've been grinding, but the dollar index is expected to go lower as the euro is expected to go higher. Fair enough? But that was a beautiful setup in advance, days and days in advance to buy that dip. So on the charting platform, we can see that daily reversal, and it was a beautiful move. And now we're just kind of chugging along into these boxes. But what has this taught us? From this recent high to low, we took out the 618. From that high to low, you can see the 618 is right here. My 786 is up here. From that high to low, my 618's here, 786 there. So these two pink boxes represent the 618, 786, all important zones for us to either get rejected to go lower or break into and up to go higher. Well, notice from that high to that low, we took out that 618 right there. That one right there. And we've been testing the 786. We still haven't closed above it, but in my humble opinion, it is coming. So by that candle close, you should be targeting 118.50 followed by 119. And when we finally start grinding up toward that target, from that high to low, we can see the 618 is right there. And we've already taken that one out. So on this lower move, there's your target here. And that says we're going 75%, we're going up to 1850. And 70 plus, we're going to 119. Well, from that high to low, we've already taken that 618 out. Right there, candle body close above, not the wick, but the body. And that says we have a 75% chance we're going to go visit 118.80. And a 70 plus, we're going to go to 119.40. So put all this confluence of events between the two moves. And what does that give you? Target between 1850 and 1950. Hint, hint, hint. Any sell-off should be bought. And this is where we're headed. Highest probability. So first target 1850, then 19, then 1940, 1950. And we've been doing that for months, years, people that have been in the service, etc. But we started talking about buying the dip down here, and you keep doing rinse and repeat on the math, right? Rinse and repeat. So I'm going to take all this off and show you, well, this is past history. Well, we gave you that in advance while we were talking about it. So let's move some of these lines so you can start to see what was there. We talked about this move from that high to that low when we started taking out that 618, 786 zone. So this area over here, we had a 75% chance we're going to 116.50, 70 plus we're going to 117, and we exceeded both and went just a little bit high, almost to our 1618 up here at 118.70. We fell shy of that one by just a few ticks, right? Not too shabby, but that was the key. And before that one, we did it on this one. We're working on to get the extension. And the one before that was this bigger correction down here. And we talked about getting to the Magic Fibo. And if you look at that bigger picture, from this high to this low, we took out what? 618. That candle body right there. What did that tell us weeks and months ago? That we were going to go up to 1370 and 115. What did price do? Went up to 113.70, 115, and we actually went a little bit higher. Set up the next correction. We reached our extension. We set up the next correction. So we rinse and repeat based on those reversals. And this one is still ongoing. So we're in a position of authority on this recent pop. And again, any dip should be bought in the short term because we have our targets up here at basically that 118.50 up to 119.50, which means we're going to reach this target here and then some. And again, where do those targets come from? Rinse and repeat. From the high to the low, so use your 2.2, from that high to this low, we're already breaking that 618, which stating we're going where? 119, 119.50. Amen? Pretty simple. Rinse and repeat. So as the dollar index tends to grind, any rally should be sold on the dollar index. So we do the inverse. We have the dollar index, and then we were looking at the euro dollar in the secondary position. So if we're expecting this dollar to go down, the euro dollar is going to go up. And when this dollar goes up, the euro dollar is going to go down. But that's why we're saying any rally should be sold in the short term because we expect this to grind lower and make a new swing point low. higher probability. And as the euro dollar, any dips should be bought because we're expecting that to go in the opposite direction. So if this goes down, the euro dollar goes up. Pretty simple. Fair enough? So write these levels down. We expect the dollar to make a new swing point low, whether it takes days, weeks. Timing is the most difficult, not where it's going, but how long it takes to get there. But we definitely expect this to fizzle and drift lower in the coming days and weeks, as we expect this euro dollar to continue to grind and go higher in the days and weeks to come. Fair enough? So 1850 followed by 19 and then 1950. And a 50, 50, 50. And we still have to get to 1850, just under 200 pips to get to the first target, and upwards of another 300 pips from here to get to the second target, which is that 1950 up there. And we're already from this swing point low up in the 300 pip range in a position of authority. And that's why we said in advance, when the daily got oversold and the PAI hooked and we got a little trigger to go long, we were going to do what? Take that trade. And it takes time to play out, but there's a high probability it's going to continue to grind. What about the pound dollar? Ditto. Talked about the pound. We talked about buying this dip. We set it in advance that this was going to pull back and then we were going to go higher. Most recently on the daily, this little pullback here went beautifully to our Magic Fibo to bounce off of. We got the reversal. We talked about that three-wave correction followed by a breakout to new highs. And we're in the midst of it. So how do I know this daily is going to finish the upcycle? This weekly is going to continue it, not only hooked and crossed from here to go up, and we even said it would start slingshotting higher and higher, and that's what it's been doing, higher and higher and higher. So this will continue to go up, this will turn back up, and this will grind and grunt its way in the next several weeks to make a new high and make a new high above that swing point. Fair enough? So let's look at the charting platform and check it out. Beautiful bounce off the Magic Fibo. From this recent high to low, we took out the 618786. So that tells me our first target's up here at that 136.54, 137, this little green box. That is from this high to that low. We took out the 618786, which right there on that green candle says we have a 75% chance to go to 136.50. Right now, we're still 150 pips from there. So we expect this stair stepping to continue. And the probability we get up to the target zone is upwards of 75%. I like those odds. Now, you look at this high to low, and here's my 618786. So we took out that on this candle. Here's the 618786 from this high to that low. There's my 618 right there. My 786 is up here. So that candle right there says we're going where? 138.80. So not only are we going to go to 136.50, 137, highest probability, but this move here with that close there says we're going up even higher toward this 138.80, 139.60. How about that? So there you have it, ladies and gentlemen. Keep buying the dips on the euro dollar. Keep buying the dips on the pound dollar. And first target is this 36.50, 37 area. Second target is this 38.80, 39.60 area. But both have already been knotted to go up to their respective target. So on this move, breaking that 618, there's my target. And once we get there, this high to that low says we're not only going to do that, we'll probably hit this target, pull back, make another higher low, higher high, another higher low, higher high. and grind up toward that 38.80, 39.60 area. Amen? So first target, 36.50, 37, 1.37, 1.3650. Then likely going to get a little bit of a pullback when it reaches that target and then continue higher. So we want to keep buying the dips until we get to that target. Then after we get another dip, keep buying the dips till we get up to this basically 139 area. Right? All righty then. What about the dollar yen? As this was moving higher, I warned you I would not be buying this to go long at this juncture. This is more likely we're going to break down. If the dollar continues to break down, the dollar yen being in the primary position is likely to keep breaking down. So any rallies in the dollar yen should be sold. And that's what I told you after this three-wave correction. I said, look for this to start correcting. And from this recent low to high, we haven't taken out this support box. That's when we get below 145.70. That's 90 something there, but we got that little swing point right there I want to take out where we went up, tested, went up, tested. So this little zone I want to take out a little bit lower than that 145.90 area. And when we do, what does that tell us? Beautiful. This low to that high, Ian, we take this zone out. So we need to take this little swing points right there, which is in this green box. We get a candle body to close below that. Then we have a 75% chance we go on to 141.60. 70 plus, we go on to 140.55, which is a high probability. That is what's unfolding. So keep an eye on this. Any rallies, in my humble opinion, should be sold. And once we go down another 100, say 200 points, start closing below this 145.70. We're at 147.70. Once we close below that, it opens the door to about a 500 to 600 pip move lower. Got it? All righty. Let's continue. Pound yen. Again, be careful with this rally. On this lower time frame, we're just kind of retesting the previous high here. But on the larger move, we're testing that 618,786 zone. And we've been testing it, failing, test, fail, test, fail, test, fail. And even on this recent one, test, fail, test, fail, test, fail. And you think, ooh, this is going breaking out. Maybe. Maybe this can grunt and grind its way up just a little bit higher, but it's still within this bigger picture. And price action at this degree, big move down, overlapping, chopping, grinding, grunting, laboring corrective action, which states we're more likely going to get another push lower and a much bigger A. All this overlapping, chopping action is definitely still corrective. That is a B. And the probability that this AB turns into a C that comes back toward these lows, and as long as we stay below this swing point high and stay in this box, the probability we make a new low is high. If this thing grinds and goes a little bit higher and even makes a slight higher high, then the C wave will come back into the area of wave A, and you won't go quite as far down, but it's still a dramatic drop either way. So I'm looking for opportunities for any big rally should be sold in the long term. I'm not talking short term. You buy a little dip and you make a few pips and you get in, get out, not for scalpers, but we're talking the bigger picture is this is A, all this chopping, overlapping action is B, and the probability that we end up pushing lower in C is very high. So that doesn't mean we can't possibly go a little bit higher. Well, why do we say that? Well, look at the most recent correction. Most recent correction from that high to that low, we took out the 618,786, but we didn't quite reach our target zone. So Randy, that loves to trade this, maybe we get another little push to go up toward 200, maybe 201. So if I see this thing go ripping up in here, I'm not looking to buy this to continuation. I'm looking to sell this to come back down. And because of that recent move here to here, we still got a 75% chance we're going to go up to 250. It's like a buffer zone, a little bit above and below the actual number. But, 250 up to 201, we should see this come somewhere into the zone. So still, that's only 75%. That's a lot, isn't it? 75% chance we're going to go up here. But there's a 25% chance this could end and come on down and it's right and make a new low anyway. But the bigger picture is that this is not going breaking out. It's going to get rejected and go breaking much lower in the long term. Short term, we probably would not be surprised to see this go up a little bit more and then start to sell off. Because again, remember that bigger picture. All of this chopping, overlapping is not conducive to, well, it's been in an uptrend, we got a correction, and all this means we're just going much higher. No, doesn't work that way. Price action is screaming A, chop, 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 B, down in C to make that move. And if you look at it in a 3-point tool, that's giving us, if we do equality, the A move matches this move. So this arrow here should, what the current high. So let's say we go up to 200, just a little bit higher. Then that would put us equality down here about 173 area. That's a lot of pips to the downside. And don't expect that once we just start going lower, it's going to do it as quick as we did here. Probably not, but it's going to grind and grunt its way down. Pay me now, pay me later. The probability that we go breaking out up here is extremely low versus the probability we go breaking down this direction is extremely high. So in my humble opinion, people think, well, this thing's going to keep going much higher. No, this is off the table in my opinion. This is very much on the table to go much lower. And we're in that 618786 zone from that high to this low. This is the 618786 zone. And we've been testing it, failed, test multiple times. And the writing's on the wall. We're going to get rejected in this pink box and we're going to go breaking down. And with this initial leg and all this overlapping chopping, in order to correct this up, we need a new swing point low. Everybody good? So right there, we need a new swing point below 180. See what that actual number was? 180.08. So, yep, what this is saying, Mr. Tucson, that's my A. All this chopping and overlapping and grinding and grunting is a B, and it still might go up another few points to get up to that 200, maybe 201. But that's the B, make that a prettier B. And then what's after AB? We come down in C, which should at least make a new swing point low below 180. And if it's equality where A equals C, then that puts us about 173. Not too shabby. And could even extend toward 168 or even 165. Fair enough? So am I telling you go short right now? No, because I think it's going to go just a grind one more time, get up there, and then start to work its way down. And during the period when you're moving lower, you still get rallies in there, significant rallies, because this is a very volatile pair. But that's what I like about it. but it's not for the faint-hearted. You have to use larger stop losses when you trade it. You can't get in and put like a 10 pip, 20 pip, 50 pip. This thing sneezes 100 pips. They can go up and down in a matter of minutes and swing 50 to 100 pips. So you need to use larger stop losses when you trade it, and you need to see the bigger picture so you know where you're headed. So in my humble opinion, this baby is off the table. Maybe we go a little bit higher, but I do not see us breaking out of this pink box, and we're going to get rejected from that and ultimately send us down to a new low. Got it? So this swing point low should be taking out, and eventually that swing point low should be taking out, giving us a new swing point low. And we're going to be targeting based on this A, B, C type of move, somewhere around that 173 area. Equality of that move down duplicated over here. Amen? All righty. Let's continue. Well, what about the markets? What about all this happening in the markets? Where are we going? I still think we're going to get a little bit bigger correction. I do think we're going to go on and make some new highs again, but we're kind of exhausted to the upside, and we need a little bit more downside so then we can go higher. We reached our first target. Remember, last few weeks when this pullback, and we did the same from that high to that low. We took out that 618 on that green body right there. Said we were going to go what? 75% chance we're going to 65. We did it. Bingo. Now what? Well, sometimes you reach the 1448 and get a retracement. Sometimes you grind right through to the 1272. But I still think before this blow off top is done, Santa Claus rally into the year type of thing, we're going to run toward that 6,600. That's kind of been my target for years now, that ES would get to 6,600. Fair enough? So how much of this pullback? I'm not necessarily saying we have to come all the way back to Magic Fibo, although I'd like to see it because, man, if this thing dropped way down here, talk about buy that dip for us to get up to that 6,600, that would be upwards of like 600 points. I like it. But in the shorter term, we can drill down to some lower time frames. Right now, I'm more bearish than bullish because you'll notice even on a 15-minute time frame, we broke below, we tested, failed, tested, failed, tested, failed, and we keep testing and getting new swing point lows. Tested here, made a swing point low, tested there, made a new swing point low, tested again, and not quite a swing point low, but we keep failing. So the probability we're going to grind a little bit lower looks good, right? That does look pretty good. Use your 3.2 for some potential target. That high, this original low to this lower high, and this isn't real pretty. It's a lot of chopping, overlapping, which still spells corrective. So in my humble opinion, those of you, I'm looking for more downside. We're looking for this to go somewhere between the 64.30 and 64.20 area. So 64.40, 64.20 area. That's where I think we're headed, right in this zone. And we've been testing on a 15-minute, and we can't break the Magic Fibo, which says we're going down. This price action overlapping chopping action says we're going down. And if we use the same analogy, that's where this number comes in. If this was the initial move lower, and that's my A, and all this chopping and grinding is my B, then we should come down over the 64.30 area at least. All right. Any questions? Not only is it below the 15-minute, check out the 30-minute. It's testing the 30-minute. We broke below. We were kind of bouncing and holding. On that way up, we kind of bounced, held, and went higher, bounced, went higher, all-time highs, all-time highs, all-time highs. as we expected, we got to our 65 target, which we said a few weeks back. This was the highest of highest probability. How do I know we said that? Because we said it a long time ago. And we said right here last week we were going to go to that 1448 to 1272 area. Look for it to grind up there. That's where it was headed. We went right there. And a while back, we talked about reaching S&P QQQ grinding to 1448 level. So we rinse and repeat these numbers as we get pullbacks to new extensions, right? So it's in there. It's like Prego. So back to ES, and we can see the probability we start coming lower looks good in the short term. Again, we were looking at 15-minute holding below, 30-minute holding below. That says more downside. Hour, we're testing the hour, so I believe there's a good opportunity for us to break below the hour Magic Fibo toward our extensions, which would be below that. See it? And if we start breaking below the hour, we have some support down in this area on the 4-hour. So here's your big support levels. The 64.30, 64.40, 64.20. If we break below that, then we're likely going to come test this. Right now it's about 63.88, and this is sloping upward. So if it takes a day or so for us to get down here, then the next support zone would be about that 6,400, 63.80 to 6,400. Fair enough? Any questions on that? All righty. So any questions on where we think we're headed? I think we're going to grind lower, start to take out this little support zone. We're kind of wedging right now, test, 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 test. But I think we're going to break down, at least go to 64.40 to 64.20 area. So this little support zone right there, this is where we're headed. If we hold that, it's possible we could come down here and bounce to go higher. I definitely think this is not the end of the run, where this is the all-time high we reach and we're not going further. Still been targeting at 6,600 up there for a very long time. So I do think we're going to get a higher low, higher high. The question is, what is the low before we go breaking out to all-time highs again? And the current price action is screaming we need more downside. So look for that. If this doesn't hold, then the door's ajar to come test this 64.09. And if that doesn't hold, then we got the Magic Fibo on the 4-hour, right? Well, what if we come all the way down here and we start breaking the Magic Fibo on the 4-hour? Then it opens the door for the Magic Fibo on the daily chart, which is considerably lower, another few hundred points lower, but that would set the tone. Well, notice what this daily does. I'm going to squinch this up so you can see a lot of pricing. We typically come back to visit this, pay me now, pay me later. We can make run for months, but we always come back to visit, run, we come back to visit. And this was the tariff. Oh, tariffs are terrible. It's going to destroy the world. And we got the tariff pullback. We did a V-shaped move out of there. We did say at the point when this bounced, we would at least go up into the zone to test it. And if we couldn't break it, then we're going to make new lows. Well, we did this V-shaped recovery and we kept going. So when we started targeting that high to this low, we put out those targets at 6,500. That's where that came from and where we are. So the same type of rule. We had a high, we had a low. And when we started to take this out, we started talking about 6,500 and we continue to see how that moves. So remember these little rules. You need these tools. And we also have it available in our MetaTrader. And it's available in NinjaTrader 8. And we have those beautiful support and resistance levels, those Fibonacci retracement extension. You go in here, you go under drawing tools, and you can see the MPA Fibonacci retracement, MPA Fibonacci extension. So those beautiful lines are in that same move, high to low, and it throws in the 618 to 786. It puts those levels in there for you. And then you can see your extensions up here, 1448, 1272, 1618. It's all in there. It's like Prego. It's in there. So I'm just throwing this on a Riot chart, for example. And I'm looking for Riot to pull back and then go ripping higher. I actually bought some call options on Riot. I bought the 14 call option out to October, which I expect is Bitcoin. We're going to go over Bitcoin in a moment. Bitcoin will pull back. We'll get a pullback on this, and then we're going to look for a bounce, and it's going to go breaking out. But that's something I'm definitely watching, and I expect Riot and the cryptos to make another run, and this dip should be bought, and this thing should go running again as Bitcoin makes its run. Fair enough? But that's why I got these extension retracements on here. And what are we looking for? Well, you can do the same type of thing here. You can, whoop, not that much, stretch this out. In this most recent move, use your drawing tools. I'll probably have to remove some of the other ones so it's not too busy. So from this recent swing point low up to the swing point high, we want to watch this 1160, 1140 area, because what happens, Mr. Tucson? If this pullback while Bitcoin's pulling back, we don't hold this 1160, 1140 area, and we start closing below that, then it says we have a 75% chance we can go down to 1170 plus, we can go down to 1080 area. So I'm still looking for more downside to buy that dip and for this thing to go breaking out. And once we do, the technical picture of this move from this recent high to low, that high to that low, we start closing above 1350/14, right? Remember high to low, 618786. So I'm watching for this. If we break below it, we're going to go a little bit lower. Perfect buying the dip. And as we rally back above 1350, 1430 area, then it says we're going up here to 16 at least, if not up here to 18. So there's a very good chance by October, we're going to see Riot make a move towards $16/$18 target. That's just this technical picture I'm looking at. Amen? And Riot goes as Bitcoin goes. Bitcoin goes ripping, Riot's going to start to pull up. Bitcoin goes dumping, Riot's going to pull down. Just the way that happens. Amen? I'm not looking for massive moves, but on some call options, you can make a nice little chunk of change from a move from $12 range to go up to 16 to 18 range. That's pretty good. All right, no buy, sell to hold because I can't tell you what to do, but that's just what I'm looking. But as a disclaimer, I certainly can tell you what trades I'm getting in, and that is one of them. Expecting this to pull back a little bit more as Bitcoin does. I'll stretch that out. And we're expecting this to pull back some more. Again, we don't hold this 1160, 1140 area, then expect you're going to go down about 11 to 1080 area. And this would be a good, maybe retest the low, give us a great opportunity for us to get in and look for this thing to make a run toward that $16, $18 move toward the end of the year. Fair enough? All righty. So it's in there. It's like Prego. So let's finish up with the markets and we'll go to Bitcoin and we'll get into that. But here you go. NASDAQ the same. Expect some more downside. Look at the lower time frames, stretch that out. We've been testing the 15-minute Magic Fibo. That's in the software as well. Notice in our NinjaTrader, it's in there as well. That's the Magic Fibo line. So that is a critical line to have on your chart. along with our Fibonacci extension retracements, and of course, the beautiful software, MPA PE5 version 5.0 software. So let's finish up. We're below the 15-minute. We're below the 30. Testing the 1 hour, now breaking it. What a beautiful move. 4 hour, likely we're going to dip down to this area. We don't hold the 4 hour, then we could potentially get a much bigger correction, which would put us way down here. Not saying we're going to go that low, but we definitely going to go lower to test that zone. And if we get the higher low, higher high, great. If not, how do we know where we're headed? Well, stretch this out, zoom in on the recent price move, and remember this high to that low. We broke that 618786. So where did we go? 24,000. We talked about that. Into the weeks, rallied up into there. Now we need another correction. So from the recent low to high, here's my 618786 zone, this green box. So Mr. Tucson, I would expect this is likely going to go and test this. So as we start to push back, we're likely going to test. If it holds, then we could go breaking out to new highs, start targeting 24.4 area. If we don't hold it, then the door is ajar to start going what? From that high to that low. Here's my 618786. So if we start closing below this green box, then we have targets down here at 22.6, 22.4. And if those don't hold, then we got the Magic Fibo. It is sloping upwards. So as this crunches and grinds down, we can maybe come down to the daily Magic Fibo. That would be about the furthest I would expect this decline to come before we go breaking all-time highs again. So in closing, both ES and NASDAQ are expected to give a bigger correction. And from the daily chart, from the low to the high, we have a ways to go before we start proving it. But in the shorter term, I think we're definitely going to come and test this extension to the downside, which again, we go to those lower time frames, say the 1 hour, extend this out. And as we start to break the 1 hour, it sets the tone. We're coming down to 64.40, 64.20. So that's the plan. This thing's going to chop and grind, but ultimately head down here, in my humble opinion. It's possible it could hold on here and go breaking out, but it just doesn't look complete. Look at that correction. That just doesn't look real complete. If this is the first leg down, all right, let me move this over here. If this is our first leg down, and this is the part of the correction we're looking for the second leg down, then we haven't reached our equality point yet. That's where that 64.40 comes into play. So be careful. Any rally should be sold because we're going down here. If we don't hold this support box, then the doors are ajar to go to 64. And if that doesn't hold, you can see where your Magic Fibo start coming in. And if that doesn't hold, then you have your 4 hour here about that 63.80, 63.88, 63.70. That's the line right there. So we don't hold this, we're likely going to come test that. Amen? Any questions? Down we go. We could bounce out of there, yes. So if you're scalping this down, be sure you take your profits and be in a position of authority. I still think if we don't hold this, we're definitely likely going to come lower toward this Magic Fibo on the 4 hour. But I would definitely be in a position of authority that in case it bounces out of here, because the plan is once we get that correction over, we're going to go new highs, or we come down here, we go to new highs. And if we don't hold that, we're likely to come here. If we don't hold that, then we're likely going to come down toward the daily Magic Fibo, which is over there, and look for this to go higher, which is actually a little bit lower than this picture. but you can see when I move it to the daily, it's right around that 6,100 area. Let it pop in here, right around that 6,000, 6,100 area. So that's part of the plan. This low to that high, I think it's going to hold to go higher. But if we don't, that zone we just discussed, then we're likely going to come down to that 4 hour, which is around that area. And if that doesn't hold, then likely going to come test the daily. The lowest I think we'll go is toward the daily to reverse. Again, short term, the lowest I think we'll probably test is this area. If we don't hold that, then we could go to the daily, but we're due to break the 1 hour. We broke the 30, we break the 15, the 30. Now we're going to be breaking the what? How do I know this kind of stuff, Mr. Toussaint? It's the price action. Likely coming here. So again, look at you as a scalper. You're sitting pretty. You're up several points already. And we're looking for this to go a little bit lower. We're getting close to 64.40, 64.46. So expect this to continue to go down. If we don't hold that, then we'll probably come down aboard that 64. And that's getting awfully close to our 4 hour Magic Fibo. So in closing on the NASDAQ, we're going down and we don't hold this green box. We're going to go test the Magic Fibo on the 4 hour and likely could bounce off of that. Certainly. Last time we tested down here, we broke back above and then sent on the new highs. So likely we come down here and bounce off. But if we break below that, anything like a break below, and instead of rally back above, it rallies to it and fails, then this type of move, a break below the 4 hour, a retest that fails and starts heading lower, then that is screaming we're going to go to the daily Magic Fibo, which is sitting down here about 66,034. Amen? So in closing, what? We should be making a move. If we don't hold this support zone, we're going to go down here. We don't hold that, we're going to go down toward the support zone where the daily Magic Fibo is. Either way, Mr. Toussaint, if this thing breaks down here, this could be a great buying opportunity. If it breaks below that, retested and failed, then it's going to be a tremendous buying opportunity down here around that 6,000 and change where the daily Magic Fibo is. Amen? All righty. What about IWM? Trying to be bullish, it went to those extensions we talked about. Why? High, low, broke to 618,786. So this green candle right there, from that high to that low, 618,786. So all in that one candle stated we were going to go where? 228, 75% chance, 70 plus, we're going to 230. And where did we go? Right to that target and looking for this to go lower. Amen? That's on a 4 hour, but I'll show you on the daily picture. This chart is looking way more bearish than bullish because of this move down, all this chopping, overlapping action, and likely going to get another leg down. Well, one thing's for sure. This could get real spicy to the downside. Some jalapeno, habanero, whatever your spice is, Cajun spices. As this starts to break down, if we don't hold the Magic Fibo on the daily, this could really escalate toward the downside. So we've been on a nice little run lately. And before that, the recovery run bounced off the daily Fibo to go in and reach the extension. Well, I'm looking for a correction back down. And if we don't hold and we come down and break this zone, look out. That could set up some nice move to the downside. And from the bigger picture, why are we talking about that? Look at this price action. ever since 2022 over here, top of 2021. We've been chopping, overlapping, grinding. We went back in basically a double top over here. Since then, we're still at lower high, double top. After all this overlapping, chopping action, that's really not conducive to this thing going ripping up at the moment because we got our leg down, all this consolidation, overlapping. We should get another leg down, which means we need a new swing point low below this 160-65 area. So I made a statement, not a prediction. Everybody predicts everything, but I make statements. And that is before we go breaking 260 and higher, there's your 260. Before we go breaking 260 and higher, we're going to come down and break below 165 and lower. Got it? Based on what? That move down, all this overlapping chopping action, and most recently back into the 618-786 zone and still chopping, says we likely need a new swing point low to clean this chart up, and that's where we're likely headed. So be careful at these nosebleed sections that I do before we go breaking 260 to go higher. We're going to come down and break 160 and go lower. Amen? Well, along those same tunes, look at ES. I said this a very long time ago. I said before ES breaks 7,000, which is up here, we're going to break 4,000, which is down here somewhere. So before we break 7, we're going to break 4. Got it? So that's not a prediction because I'll leave that to the prophets. That is my chart analysis long term. And we expect before we break 7, we're going to break 4. And we got Elizabeth, I'm coming to join you, honey, probably as we get into 2026, if not late this year. But before all that happens, we're still going to get some all-time highs, still shooting for that 6,600 area. And we're not quite there yet. Got it? So circle the wagons where we just reviewed. Expect ES, NASDAQ, and those to pull back a little bit more. We went right to that zone. Look at this stuff, Mr. Tucson. You can't make this stop. Went right to that zone. Now, do we rally back into this and retest it to fail to continue lower? Or is this the end of that correction we needed? And we can start going on to break new highs. We shall see. But that's why we talked about this price action. And look at this baby coming into its position on these. Broke the 1 hour, coming down toward that zone. And that's why we brought that up, that we were likely going to see a little dip lower. And that's exactly what we've seen. Amen. Is this the end? Well, you got to do the same type of move. You go to your 30-minute, you stretch that out, and you do the same type of move, 3.2, from that high to this low to that lower high. We extended not only quality of the first leg down, we extended all of the 1618 zone. Is this the end and we go breaking out? Whoops, didn't mean to move that. But there you go. We reached that 1618. Is that the end and we start breaking out? Or do we continue to go lower? Again, we have the 4 hour that we came very close to. Doesn't mean we have to break the 4 hour. So I'm watching this. I would not be surprised to see us dip a little bit lower before we're done. We did reach the extension though, and this could be the end. We shall see. So how do I know this is the end and we're going to go breaking out? Well, you simply reverse the script, flip the script, and you go from the, I'm going to remove a bunch of these lines so you can focus on what's at hand. And from this recent move, that high to this low, if we're going to go bullish to go breaking some new highs, then from that high to that low, we would need to take out, guess what? 618786 zone. So if price action can get back above 23,850, 23,940, so we start closing above this green box, then we'll start targeting 24,140, 24,208. But if this even starts to rally up, hits this and fails, then we're going down to not only test the 4 hour, but like I said, we start breaking that 4 hour, it opens the door toward the daily Magic Fibo. But this is the big support zone. That's from the swing point low to swing point high. This is my support zone for the 618786 zone. From that low to that high, this is a support zone. So this is why I think we're going to come and test the Magic Fibo / this zone. Otherwise, if this is bouncing off of that smaller extension, that 1618 we just showed you, and we're ready to go breaking out, then we need to clear this hurdle. And I'm going to change this to pink. So this will be our resistance zone we need to clear to set the tone we're going higher. Amen? So in the short term, we're stuck between resistance and support, and the bias is we're going to go lower than higher right now. And then once we make the correction, yes, we will go into all-time highs again. That is the plan. The question is, how much more do we go? Personally, I'd love to see us break down and even break below the support zone, which would then give us extensions to the downside, which sets the tone for our daily Magic Fibo. And again, notice it's sloping upwards. So if this takes a few days or so, where we just kind of stair step our way in here and we come down and bounce off the daily Fibo, that would be awesome. If we can come down here, that is a huge buy because we were going to go on to make new all-time highs again as we pull back. And again, I'm not going to say we're definitely going to come test that. First things first, we got to get to the 4 hour and break that one. We broke the 15, tested it several times. We broke the 30, tested it a few times. We just recently was breaking the 1 hour, tested it, going lower. So the logical area after breaking the 15, the 30, and the 1 hour is to go where? Magic Fibo to Magic Fibo, traveling beautifully toward those targets. So look for this to grind toward this Magic Fibo here and the support zone. If we break that, then we're going lower, clearly. Got it? And potentially even moving all the way down toward this zone here, which would be my daily Magic Fibo. Got it? And it's sitting right now at 21.5, 21.7 area. The high is the 21.7. The bottom is the 21.5. So we don't hold that support zone where we're likely going to go as this is sloping upwards. So each day that goes by, this kind of goes up, 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 up. And we start chopping. We don't hold that. We break it, retest, fail it. Then we're likely going to get sucked and pulled in it. Maybe we meet it at 2,200. 22,000. But that fits in with my extension support zones in these little boxes. Got it? All righty then. There you have it. And last but not least, we were just finishing up with IWM. And again, we expect some pullback. We reached the extensions. I'm still way more bearish than bullish on these. Why? Because again, going back to 2021 high, Russell, the NASDAQ, well, Russell did this when ES, NASDAQ, all were making all-time highs, all-time highs. We got the correction, and since then, all we were able to muster was basically a double top in this area, where what? ES, NASDAQ, and all went to all-time highs numerous times. Look at us here. We're struggling to just reach the top. Put that in the same vein is 2021 top for ES. Check it out. You got to go back. Look how this thing is blown out of there and go back to that 2021 top area right there, early 22 or late 21. And look, we not only pulled back, but we blew past that. Look at how far we've gone, thousands of points above that. 1,000 plus plus, almost 2,000 points higher from that same swing point high. See it? Way different chart structure. Look at NASDAQ. Way different chart structure. Isn't that amazing? And we went on all-time highs, all-time highs, all-time highs, all-time highs, even with the correction to retest that prior high. All-time highs, all-time highs, all-time highs. Different structure than this guy. Way different. Amen? Way different. So this is why the statement is before we go breaking 260 and higher, we're going to break 160 and lower. And yes, before we go breaking 7,000, we're going to go breaking 4,000. All right, let's continue. What about black gold Texas tea, the Beverly Hillbillies? Black gold. Go back to my daily chart, get all this stretched out. Bias was we're going lower. Still think it. We're grinding. We broke below our support zone, which was that prior May of 23 low. And we bounced off of that and we started testing it and we broke below. We went back above. Now we're breaking it back again. So what I said several days ago is after that move, this retracement, let me get this, bring this down a little bit lower so we can see that. So this leg, this three-wave correction. So we got the A, a little three-wave correction for the B. So this is my A. This is my B. And we're likely going down in C, which looking at the A, the B, we're already broke below that A. So far, so good. And we said if we start taking this zone out, we're likely going to grind and grunt towards 60. That's our next level of big support, right around that 59.60 area. You can see it on this chart. Right in that area is 60, where we tested. See it right there, support zone. So if we do break below 60, that's where we're headed. Hint, hint, hint. We're going to grind our way down towards 60. But if we start closing below 60, the door is ajar to go to 53, 52, even push us down to 50. Kind of had this 50 target out there for a long time. And we got to 55. But what is the same problem we're having, Mr. Toussaint? Since we got that 55 low, we're chopping, overlapping, grinding, grunting, laboring rise, and we're chopping, grunting, grinding. So all this chopping, overlapping on a chart, kind of screaming, we need a new swing point low. Below what? Below 55. So it's possible that we could hold this box and go breaking out, or if we do break 60, that's 60.59 area, which is these wicks down here, that support zone, we break that, then the door's ajar, we're going down at least to 53, 52, and logical place to go test would be 50 down there. Amen? But most recent price action, this push lower, and this corrective action overlapping stated we needed a new swing point low. We got that. Now, if we do take out the 60 target, then we're going lower. So we kind of said that a while back. Expect R to continue to grind lower. Expect oil's headed lower. Sell rallies. That was last week. And we expect R to grind down to 60 a couple of weeks ago. So it's been in the cards, and the technical picture is still playing out. So look at it. Beautiful. And what did we get the other day? We got a rally in which to sell, rally in which to sell, rally in which to sell. So again, any big rally should be sold in the short term, because I truly think we're going to go and test that support zone right there at 60. And again, not only do I think we're going to test it, but if we break below it, the door's ajar to go to these extensions, 53, 52. And what is this support zone? From that low to that high, that's my 618786 zone. We've been talking about that all day long. And if we break it, where do we go? 75% chance we go on to 53, 70 plus, we go on to 52. And that would give us either one of those gives us a new swing point low below 55. And if we break it, then I still think the logical place for us to continue to grind down to is 50. But we could reverse in this zone. First things first, sell rallies till you get to 60. Take your profits. We break 60, then expect a nice little move down to 56, followed by 54, followed by 52, followed by 50. Amen? Not looking for this to go breaking out, so any rallies should be sold in the short term till we get down and test that 60 price range. Possible we could bounce off of that, but if we break it and we get a candle body close below 59 area, there's these little wicks down in here go down to 59.74. So we want to see a close below 59.50, say, candle body, not a wick. Then it sets the tone 56, 54, 52, etc. Amen? All righty. And if you do look at the bigger picture, we've been talking about this big major battle zone. That was that May low here. We bounced off of, still overlapping chopping, and we talked about this for months, that based on this May low and that rally up, all this overlapping chopping action stated we needed a new what? New swing point low below there. We finally got it. And ever since we bounced in all this chopping overlapping action, doesn't that look exactly the same? You can stretch this out a little bit so you can see a little bit more price action. But once we found that low, we got what? Overlapping, chopping, lower highs, lower lows, grinding action. So we set it way back over here a couple of years ago when we bounced and started doing this overlapping. I kept telling you, well, Mr. Tucson, we're going to need a new swing point low to clean this chart up. We got it. But now look at, since this low and this new low here, it looks very similar. And what method? We got a run, but then we get overlapping, chopping action. So look at this most recent run. We bounced, we tested, we went up. Now we got chopping, overlapping action. So what we said year or so back, that all of that action meant there was a strong chance we were going to need a new swing point low. On this one, we got it. And the similar type of action here is being played out again. So what is that telling us? One more time, we need a new swing point low. I like it. So, in closing on black gold Texas tea, zoom in, look at the current price action. We're going to 60. Any short-term rally should be sold. We're going to go test 60. We close below 60, then it sets the tone. We're going to make a new swing point low, and that's where you target your 54, 52, and 50. Got it? So this still could be this rally up, break below, sets the tone. We come down here. But if we hold 60 and then go breaking back above that swing point up here, then it sets the tone. We're going to go much higher. Amen? So do the math the opposite direction. What if this is the high and this is the low? We come down to 60 and hold and we bounce. Then we got to get above this resistance zone up here from that high to that low, 618,786 zone. And if we go taking that out, then Mr. Tucson sets the tone. We're going to go higher, obviously. But for now, this sets the tone. We're going down to 60. We don't hold 60 from that low to that recent high. We don't hold the support zone. Then it says 75%, we're going to 54. 70 plus, we're going to 52. And likely will take us down to 50. First things first. Any short-term rally, sell it. We're going to 60. What about gold? Still think gold is struggling. All this overlapping chopping. You're going to hear me refer to that frequently. But we did get a beautiful three-wave move down that could have looked like, yep, there's your correction. We're ready to go blasting off to all-time highs again. But as I was warning you, and go back in the archives, when we got up to the all-time highs around that 35, I said I would not be buying this. We need a retracement toward the daily Magic Fibo. We're on a 3-day right now. So let me go to the daily. We need a move toward the daily Magic Fibo. But what's wrong with this picture? Looks like old black gold. Got a beautiful three-wave move, and this could have been the end for us to go breaking out. Woo-hoo! But since then, what do we have? Chopping, overlapping, grinding, grunting, laboring move. So what is that spelling? A down, B correction, C down. So we're going to come make a new swing point low to clean this one up. How do I know? Well, it did it on oil. It took some time from that May 23 low. We bounced, but then we got these overlapping, chopping, lower highs, lower lows, same type of move that warranted a new swing point low. So in my humble opinion, gold before we go breaking out, which it's definitely going to go. My next target up is 5,000, but we need to break lower first. And the lower we go, the more that's a great buy. Because again, I think gold is definitely going to 5,000, but this correction is not over. So if you're a short-term scalper, any rally should be sold and look for this to continue to break down. The writing's on the wall. After this low, all this overlapping, chopping action is screaming, we need a new swing point low, which ever since this 35 top, I said I would not be buying here. And even after this correction into the 618,786 zone, we tested it, failed, tested it, failed, tested it again, failed. So this is why it's screaming, we're going down to make a new low and likely going to get sucked and pulled toward this Magic Fibo. So I would not be surprised to see what? Price go down to 3,000 or lower before we reverse and go higher. So Magic Fibo or lower before we reverse to go higher. So short term, any rallies should be sold, not dips bought at this juncture. So I guess as a scalper, well, I bought the dip and I made some money. I bought the dip, I made some money. But I'm just looking at the bigger picture. We're still getting lower highs. And I suspect we're going to ultimately end up with a new lower low to clean this chopping, overlapping action, clean that chart up for us then to go breaking out to new highs again. Fair enough? All righty then. There you have it. And those of you that have been with us, over 90% of our membership has been with us for numerous years. And go back on gold here and go back in the archives, they're in our system, where we talked about when gold was up here at 2000, 1900. I made a bold statement, not a prediction, but when it was up here, I said gold will go down into 1,000 area before it reverses to go to 3,000. That's pretty impressive. And this was not after the fact. It's when we were up here. I said we were going to chop and grind down to about 1,000. Then we would look for a great buying opportunity for us to then rally to 3. Went up to 35. Now it's a smaller type of correction, not quite as deep and as long, but I'm expecting this correction to come down. Then we go looking for 5,000. Amen? But there you have it. So zoom back up on the daily. Current price action says any short-term rally should be sold, as we expect gold to correct and make a new swing point low below that swing point low here, which puts us at our magic Fibo and lower. So I still think there's a very good chance we're going to go toward 3,000, maybe 2,800 by the time this thing is done, before we go breaking back out. Silver, I'm a big fan of SLV, as you well know. I have a bold statement ongoing right now. SLV will reach $60. SLV will reach $70. In my humble opinion, definitely going to get there. But we need this correction. And notice the rinse and repeat. Off of the run up. Well, how long ago did we start talking about this run on silver? Let's go to silver software. Made a bold statement a long time ago, right, Mr. Tucson? Long time ago. And we go to the monthly chart. We had this beautiful rally up, retracement to a 618 zone that held. And we talked about this going to 35 and eventually going to 41. Almost got there. 40, it was a 40 target. We almost got there. And we're kind of chopping, so I'm looking for a little bit more pullback before we get up there. But then not only are we going to reach these targets, we're going to go on up to $60 and $70. But this was years ago. We said we were going to those targets. 127, 1618. Years ago. Boom. Now, on current price action, we're expecting this pullback to come at least to the magic Fibo or lower. So set an alert with your broker. SLV at $30 or lower is a bargain, a steal of a deal, right? Do we get to 30 or lower? I think we're at least going to test the magic Fibo, and it's right around that 31 area now, but a good chance we'll probably get to 30. And how do I know when silver's ready to bottom reverse? I want to see gold down around that 3,100, 3,000 or lower. I want to see silver around 31 or lower. And that's a good time to buy gold and a good time to buy silver. And the lower it goes, the more we like it. Because remember, we're not only going to 41, we're going to 60 and we're going to 70. No ifs, no buts, no ands. Silver is in high demand. AI uses a ton. Quantum computers uses a ton. Chips use it. We put it in everything has silver. It is a finite supply out there. It's not unlimited silver. And supply and demand says when you have high demand and a low supply, prices go to the moon. So whether you look at Economics 101, the price chart says we're going to go lower, and the lower we go, the more appealing this is. and I like SLV. I own SLV, and I'm looking to add more and more as we get dips in the years to come. And where are we going? Go to the higher time frame, go back to the prior swing point. And why is it screaming we're going to 60, 70? Because from the high to the low, we broke the 618. Right at the 786 zone, we actually broke that too, right? And what does that tell us? Mr. Tucson, we have a 75% chance we go into 60. 70 plus, we go into 70. That's already on the cards. So any dip should be bought, and this will go up there. And this is a conservative target, in my humble opinion. When you look at the big picture, very conservative. Why? Look at this exact picture on silver and lay gold there in its place. Gold got the pullback we talked about, right? Remember, we go to 1,000 before we go to 3,000. But look, gold's broken out. And it went to a 1272, 1618, 272, 2618. Wow, that's impressive. Not only did we break all-time highs, but we went soaring past the 1272, 1618, 272, 2618. And silver, we hadn't even broken all-time highs yet, much less to start reaching some of these targets. And they get quite lofty up in here. So I'm not trying to tell you, silver's definitely going to 300. It's going to catch up with gold. No. Now you see why my $60, $70 target is so conservative and why I can make such a bold statement. Silver will reach $60 and $70 zone, no questions asked. So, in closing on silver and gold, still expect a little bit more of that pullback. We're overdue. I warned you when silver was popping back in. What? The high to the low in the 618, 786 zone. He's getting rejected. Where are we going? 32, 3180, 3150, right around that magic Fibo. So this says any short-term rallies on silver should be sold as we're expected to come down toward the zone, the magic Fibo. And if we break it, it sets the tone to go lower. So anything at $31 or lower is a beautiful buying opportunity to add to SLV for this thing to then double in price to go up to $60/$70. Amen? That's why the lower we go, the more appealing it becomes. So would it be absurd to buy it at $34? I told you back here at 33, it was a decent deal. You could buy it then. And more importantly, on our latest pullback, when this baby hit this $26 range, so this is a great buying opportunity. Because again, we're going to 60, 70. So even at 35, 36 up here when it topped out, that's still a good deal, but I'd rather buy it at 30 or 31 or 28 than at 36 because that's just that much more profit. Got it? All righty then. So definitely going higher. Look for this to pull back short term. Any rally should be sold. Look for this to go lower. When we start getting in that $31, $30 range or lower, salivate country to buy and shoot for your 60, 70 target. What about Bitcoin? Still think Bitcoin's going to go lower on this correction. I thought we might see it break out, but the breakout fizzled. Hey, thought this was it. Woohoo! It's going to go up to those extensions, but it fizzled. And now, ladies and gentlemen, from the low to the high, we failed to break out and hold the prior high. We failed to do it. So now that we retraced, Let's see where we closed today. But Mr. Tucson, from that low to that high, we closed the 618 barely. And today we're below the 786. So if this holds, not a rejection wick, but the candle body closes, then it says what? 75% chance we go on to 110. 70 plus, we go on to 108. And guess who's sitting in the vicinity? Magic Fibo. So this looks like a expanded flat ABC correction. So we should see us come down. Again, we closed below this today. Candle body, 75% we're going to 110.2, 110,200, and 70 plus percent we're going to 108,600. And if we do that, and this is kind of sloping upwards, likely going to buy the dip for this thing to go rocketing higher again. That's the plan. And the bigger picture, you know how we feel about Bitcoin, go to a monthly. For those of you that are not familiar with crypto and may just be seeing it for the first time, every 4 years is what they call a crypto halving. And post halving, Bitcoin goes on a 12 to 18 month run. Like clockwork, it goes back every prior halving. And this, again, look at the halvings as the blue lines. When Bitcoin started coming out and we went for the first halving was back in 2012. It went on a 12 to 18 month run. Got a pullback in the crypto winter. Doesn't look like much on this chart because look how all this is gobbled together. But these are big moves for 12 to 18 months. You get your crypto winter low. Next halving goes on a 12 to 18 month run. Get your crypto winter low into the next halving, goes on a 12 to 18 month run. Crypto winter low, 12 to 18 month run, which we're in. And then the next one will be in 2028. So every 4 years, you get a crypto halving. Every post halving, you go on a 12 to 18 month run. So we can stretch this out and let you see what kind of price action that looked like. It is massive. Into the first halving, we were trading about $8. Imagine buying Bitcoin at $8. Wow. It went on a run, and that doesn't look like much, but it went from $8 up to 1,200, 1,600 area where it topped out. And get a number there. Let me move that over into the 900 range. Sorry. Let's get a swing point high on that. Yeah, 1,200 right there. 1,200 from $8 to 1,200. Like it. Got the pullback into the next halving, which we were trading somewhere around that 400 plus range. 12 to 18 months later, it rallied to a high up into the just under 20,000. 800 to 20,000. How about that? 12 to 18 month run. Next time we were about 8,000 and we rallied all the way to 70,000. Right? Just kind of looking at this, rinse and repeat. What else do we know? Each time we topped out in 13. 4 years later, 17. 4 years later, 21. 4 years later, we're topping out when? 2025. How about that? When did we get crypto winter lows? Back in 14, over here, 14 right there, arrow and 14. And then we bottomed out in 18 right there in 18. And then we bottomed out in 2022. So based on the four-year halvings, based on where we topped out every 4 years, 13, 17, 21, 25. And then when we bottomed out, 14, 18, 22, we can then move this into a lower time frame. And I'll go to a week. Let's do a 3-day. Let's do a weekly, and I'll show it to you. So you see this nibble zone? We can base Bitcoin's movement, ebb and flows based on the halvings, 12 to 18 month runs, The crypto winter lows, roughly every 4 years it bottoms. So it was 14, 18, 22 most recently. And we bottomed into having 12 to 18 month run. And then what's going to happen? We're going to top out this year. And then we're going to start breaking down into 2026. So we bottomed in 14, 18, 22. What's next? Late 26. So just like here, as I was doing everything, shouting from the rooftop, Bitcoin below 20,000 is a steal of a deal. It is like committing a crime to be able to buy Bitcoin at this price. And most people, when they see the price down here, think, oh, it's a fraud, it's this, it'll never turn out to be anything. Bitcoin's going to $1 million. Mark my words, Bitcoin will reach $1 million. Not this year, obviously. Maybe not even the next cycle in 28 going into late 2029 rally, but it's coming. So back here when it was below 20, we talked about it. Why? Because we're going to 150, 170. So far we got up to 125, close to 125, and we're not there yet. So still think we're going up here to 150, 170. Then at the end of this year, late year, maybe fall, September, October maybe, or even the end of the year, we're going to look for what? Crypto winter low to come into 2026, late 26. So just like here, 20,000 and below, I'm making a call. Bitcoin at 50,000 or lower is going to be this same type of deal here. And it went from what? That to like 150, 125 so far. But I think it's going to go higher before it's done. Then you get your correction into late 2026 is the nibble zone. 50,000 or lower is a steal of a deal because the next big run after 2028, which would be what? 12 to 18 months post 2028, puts us in late 2029. And we're going to look to sell then. So we buy in 22, sell in late 25, buy in late 26, sell in late 29, rinse and repeat, rinse and repeat, rinse and repeat. And the good news is we get to 50,000 or lower, then we're talking hundreds of thousands the next go. How about that? I like it. But this is the typical buy low, sell high scenario. So we're going to buy low in late 2026, and we're going to sell high in late 2029. And that, my friends, is not armchair quarterbacking. That has not even happened yet. But that's what we were here for. I had for a few months down here when Bitcoin was trading at 20,000 and lower. I kept saying, dude, this is an awfully limited opportunity where you're going to be able to buy Bitcoin this low, and this thing's going to go ripping after the next halving. It ripped into the halving with the ETFs and all that came out, and then still going, and we're not done yet. In my humble opinion, we're still going to go higher. So after this Bitcoin pullback to that 110, 108, maybe daily Magic Fibo, then we go ripping up into September, October, maybe toward the end of the year. And then we look for what? Crypto winter low going into late 2026. And we rinse and repeat to buy and hold from 22 to 25. Then we're going to buy in late 26 and hold a late 29. So it's like a 3-year investment that can change your financial future, as we've been discussing. So last minute, zoom down. Harold, I think we're going lower. Correction. We didn't hold the zone we wanted to hold. We thought we might bounce and go breaking out from here. We thought this breakout might be the one. It wasn't. It retested the highs, dipped, and then came back down. Now we're closing below, so that's where the 110, 108 target comes in. So if, which is a good chance, we're going to see this candle body close below that 786, this 114. We closed below there today, which, Bitcoin doesn't close. It's constantly trading, but you do get a new daily candle regardless. And if we have this candle body close below that 114 area, then it says what? We're going down to 110,200. Good chance we go 70 plus down to 108,638. So we're probably going to get one more dip, make a new swing point low, to then reverse to give us our last push into the end of the year. Amen? All righty. So what I mentioned earlier is I have Riot. You know, we own Mara. We own a lot of these, and you're thinking, well, this is underperforming. Sure it is, but it's still a very successful investment. And we took profits, rallied, and then took profits, bought some more, take profits along the way. So we're on the house's money. But remember what I told you in 2022 when Bitcoin was bottoming and reversing? This bottomed here in December of 22, just like the other markets. We got the lows in 2022. This is a tremendous buying opportunity. We re-talked again and mentioned around that $8 range was a steal of a deal when we dipped into this zone. This is where it was what? A beautiful move up with the dip. And we talked about it here. It went from what? $6, $7, $8 all the way to 30 plus. Took some profits. We got another opportunity to buy again below 10. And still think I own hundreds of shares of this, hundreds and hundreds. So I got a lot riding on this still to come, but it's been a successful trade already. Remains big in profit where our entry point was, and we're still expecting big upside. So I made a statement which has not come true yet because it hasn't reached it. When Bitcoin breaks above that 130 areas, 125, 130, we kind of tested it and pulled back. When we start breaking from 125, say 130 and above, that's when the profit margin on those miners goes through the roof. Through the roof. So I can't wait to see what Mara, Riot, BTBT, a lot of those stocks we own, for this thing to take advantage of the crypto move. So watch what happens when we get to 130 and above and Bitcoin goes running toward that 150, 170. That's when the profit margin is through the roof and those stocks ought to go ripping. How do we know? The last time they were in this scenario, back in its run into 2021 highs, Mara made that same kind of run over here into 2021, and it started to grind and do like we've been doing, but then it went vertical, literally went vertical when Bitcoin started breaking all-time highs and getting to that profit zone, and this thing went crazy and just ripped from the $3, $4 range all the way up to 60 plus dollar range. As you can see, topped out at 80, but went up to the 50, $60 range from $8, $5. So this is what I'm expecting, Harold. This scenario right there, we should get one of those big pops. How high is it going to go? Well, even from this high to that low, we pop into that 618786 zone, which is this green box. That would put us somewhere around 50, 60 range. That's huge, right? Even if it's underperforming. But there's reason that if it really takes off like it did and finishes, this thing could pop up here, maybe that 90, 100, 130 range, potentially. But I'm thrilled already when we bought it at pennies and went up to 35 and we got that pullback on the house's money. But I still own hundreds and hundreds and hundreds of shares of these, and I'm looking to take profits when what? Bitcoin reaches that 150, 175 zone. And let's just say Bitcoin's starting to go from 130 onward and upward to 170, and this thing rips up to 60, 70 or higher right off the bat. I'm going to be sure to sell some of those and bank some of that massive profit. You know, only thing I like about Jim Cramer is bulls make money, bears make money, but pigs get slaughtered. Well, don't think that this thing has to go when Bitcoin makes that run. This thing could go popping, and then before Bitcoin tops out, this thing could start pulling back. So I don't want you to think, well, it's going to coincide perfectly. The moment Bitcoin hits its swing point high to the tick of the number is the exact same second when Mars is going to reach its all-time high tick of the moment. No, they can top out at different times, and we can see pullback start, even though Bitcoin's going higher. But when Bitcoin hits that 130 and marches from 130 towards 150 and higher, that's when this thing ought to go berserk. And when berserk goes berserk, whether it's to 50, 60, to 100, whatever, I'm going to be sure to start unloading a lot of my shares. And when in Bitcoin finally gets that 150, 170, anything I have left, I'm going to unload and wait to look, rinse and repeat back in 2026. Right? We'll see if these uh, miners are still around the next go around. A lot of them are even converting into buying Bitcoin and being a Bitcoin mortgager or bank. So it may not just be the mining scenario. So some of these little miners might not be around the next cycle. We shall see. Because when crypto goes in its big depression and the we call a winter cycle, a lot of companies take so much heat. But this was one that was around the last cycle. This is one we talked about this cycle, and we haven't had the massive breakout yet. That's the beauty. Even from our swing point low, that was crypto winter high to crypto winter low, we haven't had the massive breakout, even though it's substantial from $3 to 30 plus bucks, 33. That's a massive move, but all this is still corrective. Corrective for what? Even if that ends up being a three-wave correction, we still got more upside. Amen? Any questions? So, still think we got way more upside on these, and I can't wait till Bitcoin hits that 130 and starts going from 130 to 150 and higher. That's when the profit margin for these miners goes insane, and that's when this thing ought to go ballistic like last time. That's the plan. We'll see how that plays out. I did mention, Harold, that I'm purchasing a Riot $14 call out to October. I'm looking for this thing to pull back a little bit with Bitcoin and then go ripping towards $16 to $18 range is the plan by October. Let's see how that plays out. But anything where we're buying at $12, $14 calls out of the money calls. So that's why it's so cheap, under $1. And I'm looking to get filled. I already have filled around 80 cents, 85 cents, I think it was. And I'm looking if we get that dip a little bit further with Bitcoin, we might dip a little bit more. So if I can get filled at below 80, 75, 70, whatever it might turn out, then this thing could double easily by just getting a move toward 114, $14 target. If it goes blasting off to 16 to 18, that thing could, significant return on investment. No buy, sell to hold, but that's what I'm looking for. $14 call out to October. Give it plenty of time, September, October, for this thing to go ripping higher as Bitcoin pulls back, bottoms, and then goes breaking out. That is the plan. BTBT, again, just kind of chopping and grinding. We're expecting big things, but notice the same thing with BTBT. When Bitcoin reached that profit margin and started ripping higher, this thing went ballistic as well. So we got the crypto winter low. We're looking for the crypto run high. Where's that going to end up? We shall see, but I'm expecting big things on this as well. And when Bitcoin reaches that 130 and rips to 150 and 70 target we're talking about, that ought to push these miners to explosive gain like we did in the last halving. It just ripped higher. I'm looking for the same. So we kind of got the bounce off the lows and kind of chop, bounce off the lows and kind of chop, a little bit duration wise. And now we're looking for the big push into when Bitcoin reaches 130 and moves up higher toward 150, 170, profit margin goes through the roof. This thing ought to go ripping like it did last time higher. Amen? But we're already big in the profit and we're looking for more. Amen? All righty. So circle the wagons. Be careful on ES, NASDAQ, etc. We're expecting Harrow more of a pullback. I would likely and want to see a deeper pullback because it's long overdue and bringing us in the current price action. We dip down into the zone minimum. We don't hold this box. Then we're likely going to go test the 4-hour Magic Fibo. Would not be surprised to see this grind lower in the next couple of days. And then we'll look for an opportunity to buy the dip because I do think Bitcoin, ES, NASDAQ, etc., are all going to go to all-time highs. My minimum target is 6,600 before we're done. We came close. We reached the 65. Get your pullback. Go on by year end to 6,600 or higher. Still think before we break 7, we're going to break 4. But buy the dip. And the more we dip, the more we like it. And I do think we're not done with all-time highs. NASDAQ, same thing. I think we're going to come down and dip into this 4-hour Magic Fibo. We don't hold that. We break below that. Then we could potentially even get a deeper retracement toward the daily Magic Fibo, which is a little bit lower. And man, what if we don't hold, we break down, we come down to that daily Magic Fibo? Then you talk about a beautiful buying opportunity. Because I still think NASDAQ is headed to that 26, 24,000 range, which we touched. And I don't think we're done until we get more into the 25 to 26,000 or higher. So any dip should be bought going into the year end for that blow off top. Then we could talk about Elizabeth, I'm coming to join you, honey, late this year, sometime in 2026. But until then, buy the dip and look for this to go higher to break out. That is the plan. That's been the plan. Only question is, how far down of a dip do we go? Well, here's this box. That's from the low to the high, 618. So that's kind of where my 4-hour is sitting in that zone. So that's why I think we're probably going to come down a little bit lower and test this 4-hour slash 618 zone off of what? Low, high, 618 type of bounce retracement. Boom. Notice we dipped below it last time. We do that again. There's my 618, 786 box. Perfect area for us to reverse from again. And when we go breaking new highs, we're going to be targeting that 25. Well, first you got your smaller scale, 24.1, 24.2, 24.4. And then your upper scale is my 25 and higher toward 26 up here. Got it? But that's where I think we're going to end up topping and reversing when we're done. That's the blow off top. Keep an eye on Nikkei. We're pulling back right now, but if we can continue, let me go out to a daily. We're expecting that if the Nikkei, this is risk on. What is risk on? When risk on, you get ES, NASDAQ, maybe a little bit of Russell, but mostly these two, and Bitcoin. When those go ripping and we see Nikkei go ripping, which is in the cards for us to do this. Remember the prior low to high, we broke to 618,786. So it says we have a 75% chance we're going to 44.5. We didn't get there yet. If 70 plus, we're going to 46.4. and might even blow off top towards 50,000. So I'm kind of targeting 48 to maybe 52 range for this to play out. So maybe a little pullback into the year, blast off or blow off top. And when we see the Nikkei, which I look at as global liquidity, is up at this 45, 46, 50 or higher, that's when ES should be blowing off top, NASDAQ. So ES at 6,600 and above, NASDAQ at 25,000 and above, et cetera, et cetera. They should all do hand in hand. And even the Dow, we hadn't looked at the Dow in a while, but our DJ Dow, YUM, if you look at futures, kind of testing all-time highs and chopping. But I still think when we get the rest to do their blow off top, even the Dow's going to do a blow off top. So I'm looking for the Dow to go up a little higher as well. So around that 46, 47, maybe it goes insane up to 50. But when all of those, Nikkei's up there, NASDAQ, ES, S&P 500, NASDAQ, etc., Bitcoin, they're all up there. Then we're going to look for Elizabeth. I'm coming to join you, honey. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.